We have with us Amit Chadha, CEO of L&T Technology Services. Welcome to ET Now, Amit. So, you have recently spoken about L&T Tech achieving a $3 billion revenue target. What's the time frame you're envisaging for this, and how are you looking to achieve this goal?
Sure. So thank you so much for having me with you. One, we're looking at, if you look at the world today, right? The ER&D space is supposed to grow from the current $1.82 trillion to about $3 trillion in the next few years. Now, our goal is twofold. Number one is we want to grow faster than industry. If you look at various reports in the last few years, we have grown faster than industry. So we want to maintain that. So if I take that trajectory and I look at the ambition that the board has for us and the group has for us, we would actually like to be $3 billion with about 18% EBIT in the medium term, and then build a platform to get to about $5 billion in the longer term.
Right.
How will this happen? Three things. One, we've restructured the company and now we run as three segments: mobility, sustainability and tech. And we believe that there's enough room for each of these segments, which are approximately about $400 million each, to get to $1 billion each in the medium term. We also believe that there are some tailwinds coming out in the ER&D space that should help us. So there's software-defined everything that's happening, AI with cyber security. There's a lot more of industrial automation coming along. And third, we do see supply chains getting rejigged because of constantly changing geopolitical issues. And all these three actually help us in addressing a larger part of the ER&D pie than we have in the past.
Right. You recently closed an $80 million deal, and that tops, deal wins in the last quarter. So what role will LTTS play, in the $80 million digital transformation with the US manufacturer? Could you throw more light?
Sure. So as again, if I was to give you a slightly longer answer, see, we've been looking at the market and we've realized that we can't do things centrally. So we've been running proactive deal campaigns, transformation campaigns with our customers. There are deals that we have bubbled and closed that are less than $50 million, and those are run by the segments. And then there are deals above $50 million that range from, in fact, we have got a more than a $200 million one running as well at this stage. And then there are 100 million deals, and there are 50 million plus deals running at this stage in the pipeline. And it so happens that in this particular case, the client was looking to transform their engineering landscape because they face three genres of buyers for their products. And they wanted to create, if I may, for the lack of a better word, a product line that sells to the say the Lexuses of the world, equivalents of the world, another one that sells to the Camrys of the world, and a third that sells to the Corollas of the world. So, three different genres, and we've helped them. We are going to help them in creating those differentiated products that can go and sell to the three personas or genres of people that they're looking to serve. In addition to that, we are looking to bring together a common engineering platform for them that will help them in terms of creating a common denominator or a common platform across these three in certain areas. So there's a threefold objective. It's not a 1 year program, it's a 3 to 5 year program that we're working with them on. And we are honored and actually very happy that the client has decided to choose us over competition. And this is a net new logo and a new relationship that we are starting.
And you're confident about the momentum of deal wins in the coming quarters?
We are. So if I may, the pipeline is a lot better than it was a quarter ago, same time last year. We continue to work, and we've got a very mobilized and enthusiastic team. We've created a central deal engine that's actually headquartered in Dallas, Texas. And then we have segment deal engines that each segment runs. So we're fairly comfortable at this stage that we had a marquee quarter last quarter with a number of deal wins, and I do believe that quarter 4 will be similar, and we hope to keep the momentum as we go forward.
Right. Your outlook on FY26 in terms of the client spending?
So outlook, I do believe that in the industrial sector, I do believe that our clients are becoming a little more sure-footed. Oil and gas, CPG, a lot more sure-footed. High-tech, a lot more sure-footed. Medical is conservative but sure-footed. The only clouds that we see is in automotive, and I believe that that's an H1 FY26 play, should clear after that. So I do believe that FY26 should be better than FY25.
Right. And how are you navigating the challenges around automotive mobility?
See, if we look at mobility, that's a third of our portfolio. But if I look at automotive, that is not a third, that is smaller for us as compared to others. So we've done 2 or 3 things. Number one, we've switched over, and a significant part of the work that we do in automotive now is with OEMs across US and Europe. And we've gained market share from others as we have done that. Number two, we've created solutions around hybrid energy. We've created solutions around SDV, our own SDV stack, and around avionics and vehicle engineering, leveraging actually NVIDIA stacks and leveraging other AWS platforms and others that we've got around the marketplace. And we believe we have created a differentiated offering. There is a number of transformational programs that we're bidding on right now. I do believe that some of those will come into fruition shortly, and that should help us shake out the blues in this sector.
Tell us something about innovation within L&T Technology. How are you driving innovation, especially in engineering design?
So thank you so much for asking that. Right? See, if you look at LTTS, we used to file about 50 patents for ourselves and our customers every quarter till 21. From 21, for the last 16 quarters, we've filed 50 patents for ourselves and our customers every quarter. So we've gone 4-fold. In AI alone, there's 176 patents that have been filed. I was in Baroda at our centers recently, and prior to that in Chennai. And what really touched me was that AI is not just a buzzword for software engineering. We've actually now been able to bring AI technology into mechanical design. So bumpers, seats, body in white being designed with AI. We've got people leveraging AI for plant engineering. We've been able to improve productivity in the company. So utilization of the company that used to run at about 75% is already running in excess of 80%. I do believe that we can take that up another 5% in the next few quarters leveraging AI. So AI doesn't replace, but AI actually augments and helps, right? And that, I believe, is the key differentiator that LTTS brings to the marketplace today.
Right. Now, your recent acquisition of IntelliSwift in November, how has that enhanced LTTS digital and your AI capabilities? And particularly, how has that boosted your engagement with hyperscalers?
So Intelli, actually, we announced it in November and we closed it, I think, on 2nd or 3rd of January. So quarter 4, we are running as one integrated shop. It comes with about 1,500 bright engineers, all software engineers. It gives us 2 things. Number one, Intelli already was working for 3 of the hyperscalers that we work with as well. And with the A+B model now, all these 3 hyperscalers will be 25 million plus accounts for the company annualized.
Right.
Second, Intelli does about $50 million of revenue in healthcare, fintech, and retail. And these are 3 areas which are in the service-led engineering world. And if you look at, we were not playing in that space. So it allows us to be able to grow in that space. And I believe that when we get to $3 billion, each of these 3 should be a 100 million sub-vertical for us as we move forward. So it gives us, one, increased capabilities or increased penetration in the hyperscalers. Second, 3 new sub-verticals. And third, of course, software capabilities, pure software capabilities that we did not have to that level in the past.
Right. And on SLMs, now how are you investing in AI in SLMs? I mean, what are the kind of investments? What's your capital commitment there?
So we continue to invest between 1.5% to 2% of our revenues in technology every year. in the last 12 months, we actually announced to the market in H1, if you recall, our margins were slightly lower than H1 of the previous year because we had said that we will invest in technology. So we actually built up compute power, we dabbled in new use cases, we brought on board AI for automotive, AI for sustainability, AI for medtech and high tech, and therefore if you look at Q3, our margins operationally had drastically improved, and you will see that improvement going forward because that phase of investment is over, and we believe that that one-off investment will help us as we go forward. The 176 patents we have filed, the use cases we've got in AI is all in that direction of what we've been able to do. Interestingly, of the 25,000 people that we've got today, about 8,500 people have been trained on AI. So they've got Gen 1 module, Gen 2 module and on, and we continue to motivate them to do more and more because we don't believe that AI is just a software. It's actually for all parts of engineering, and that's the disruption and the differentiator that you will see as you go forward.
Right. The 176 patents in Gen AI, how will that boost innovation at LTTS?
So that's if you ask me, the number of patents we have filed is a lead indicator to tell you that there is a lot more that's happening, right? If I look at the kind of use cases that we have built, right? Be it design, be it in sustainability, be it in testing, be it in the software-defined life cycle, I believe it helps us cut across and create new products faster, more reliable, and of course cheaper for our customer. You don't need to reduce bill rates to be effective. You can actually leverage lesser efforts by leveraging automation to be able to do that. So that's the end game, because if you talk to clients today, they are not willing to take a leap unless they see the ROI. And I believe that the way we are doing it now, the ROI is visible a lot faster and a lot more visible, if you ask me, as opposed to earlier times.
Right. In terms of job hirings, how do you see that panning out? Are you looking to hire more people, especially at the entry, middle level?
Yes. So last year, so if I look at our published results over the last year, Q3 to Q3, we actually were flat in headcount, though we grew about 8.7% in constant currency. If I was to look at the AI productivity that I'm getting, I don't think I'm okay to not hire for the next 2 quarters and I'll still be fine with the growth. Having said that, you have to look at the future. So we are looking to take on about 2,000 freshers net new in this year in CY25, FY26, so that 5-quarter period, and you will see about 2,000 freshers being inducted in the system. We're working with various colleges. We are trying to train people so they are ready and employable by the time they come out, because there is courses they need to take before they come on board, and so about 2,000 odd people in this year that we'll take on board.
Good. Very insightful discussion, Amit. Thanks for speaking to ET Now.
Thank you so much for having me.
Thanks.